End of the week. You're in a trade. You happen to catch this right here and you're short. And all of a sudden you see an outside spike to the low and the dealer goes into chop. Just because you're in it, he's not going to continue. The end of the week. Realize that his job is to trap traders going into the weekend and hit them with the gap on Sunday night. Okay? Ojo, I'm sorry that it's going to be recorded. If you can't make it, you can make the recording. Anyone that has a time issue, I should have brought it up. 12:30 in the afternoon in Hawaii, that's beautiful. Anyone that has a time issue, what I'd like you to do is send in the homework, review the recording tonight or whenever it's convenient, then send in the homework by Thursday and let me know, hey, I watched it via recording so I can know how many people are screwed up on the time. All right? Okay, so we're talking about trap moves by the dealer. False move week beginning of the session, end of the session, end of the week. Now, I want you to think for a minute with me. You've been in a trade, U.S. session, not quite in the red box yet. It's about 8:30, 8:15, 8:15, 8:30, 8:45. We know that the U.S. session starts at 9:30. Times are New York, Eastern. The dealer comes back and hits your stop one more time and takes you out of the trade. He comes back inside the range and then rises price or drops price. And you sit there stunned and watch it because you thought you had the M or W formation. Okay? I said this before, but I'm going to say it again. It is best to wait for a setup after the session starts. Why? I'm explaining it right now. False move, beginning of the session. False move, ending the session. So from 9 to 9:30 in the gap, the dealer might spike the low one more time. Which when you thought you had a setup, he hits your stop and then goes what you thought was the right direction anyway. The dealer came back and hit the level one more time into the session. Let's say that this is 9:45. It is always better to wait to be inside the box and wait for the next part of the session to start, or the first part of the session to start, 9:30, 9:45, 10 o'clock. Those are better setups for the U.S. session. London, same thing, 4:30. In case the dealer comes back to hit the stops one more time, he doesn't take you by surprise. Okay? Don't trade this as a short. This is the opportunity. Okay, that's a big entry candle. End the week in trap mode, right? Catch them long, hit them with a gap on Sunday. Trap at the end of the week, pull away from higher level long holders, analyze, drop down. Listen, it's a dirty trick. Why do they gap? They gap because they can beat the crap out of your account. The gap allows them to offer you a shitty stop loss level. Don't carry trades through on Friday. Here's what I mean. It's in the rules. I'm buried on page 229, paragraph 7, subsection 2. I promise you it's in there. Go look. You don't see it. It's not easy to see, but it's in there when you sign up for a trading account. The dealer can offer you the first available price when the market opens. So they essentially gap over your stop loss. So if you had a 10 pip stop and they open 100 pips down, the dealer offers you the first available price in that currency pair. It might be 100 pips away. You had a 10 pip stop, your trade was under control. The dealer gaps 100 pips at the open and offers you a price point that's 100 pips away from where you were in. The trade might have been up, now it's down. The trade might have been down a little bit and you were holding it, now it's down huge and you're out. Don't carry trades because of this reason into the next week. Okay? Sign up for nothing. When you sign up to open your account, you sign a contract. You fill out the paperwork. The agreement states the dealer can give you the first available price. Fast moving markets, news time. Read it. If you haven't read it, I'm telling you it's in there. It's just a ploy to take your money. Okay, now. A typical trading week. You have to be able to identify this cycle. Okay? You have to be able to identify coming out of Friday's action. False move, week beginning. Induce people to take short positions. Okay? The dealer anchors with a stop loss. You are long against the retail trader's bias. Okay? When the dealer anchors in the middle of the week, you only are trading one direction till Friday. Away from the peak formation. Down. Short. Only short trades will be warranted. When you become more proficient, you can trade both ways. But right now, if you're struggling, I want you to try to identify the anchor point and take shorts off of stop on high drop. Stop on high drop, stop on high drop, straight drop. Stop on high drop, straight drop. With a little pin right there. Straight drop. Okay? Now, this chart, I can't even tell you how old it is. It was when the pound was $1.50. Well, it comes back around all the time, so. Here's what I want you to understand. And the question came up already. Is it always like this? Is this the cycle? Yeah. That's what I'm trying to tell you is that if you haven't delved into understanding the weekly cycle on the 15 or the 1 hour chart, you're doing yourself a disservice. That's one of the reasons why you're struggling. If you can't identify this stuff after it prints, if you haven't marked the chart up once or twice and looked at, wow, it's the same shit every week. The only difference between 1 week to the next is where the tracer falls. Sometimes this might start Sunday, Monday and anchor and rise for the rest of the week. Sometimes it might start on Thursday. You might get the midweek reversal. Go look at the pairs this week. If I could take this picture and transpose it over, it's the same shit. That's what I'm trying to tell you. It's not like they have a monster bag of tricks. It's not like they go, oh, we'll hit the stops high, sideways, come back, fly an airplane into a building, drop the price, raise it back up. Think. All those things are distractions from you seeing what they're doing. It's like the best way to describe it is like when you're playing with a kid or whatever, you hold a hand, watch the birdie, and stick them in the ass with a needle. Give them their medicine, right? When they do all this other crap, the news, terrorist stuff, things that happen in the world, events, you'll notice that the news comes out, favorable or negative, they still make an M&W formation and drop a rise price. You'll notice that bad events happen, there's terrorist attacks and threats. Guess what? Go look at the charts. There's still variations on this theme. M&W, weekly cycles. They use that shit as the reason to trick you. You have to be the filter. You're grown. What you have to do is realize the dealers have a handful of tricks and that's it. Induce people to go short by showing them something. Induce people to go long by showing them something else. Hit the stops. Take the traders out of the business and daze them and confuse them. Make them look like deers in a headlight. And then go in the right direction anyway.